This is Justin Pulitzer. This is my weekend video for the week ending January 18th, 2015. Monday is closed in observance of the Martin Luther King holiday, and I will be posting this tonight, so you will have the benefit of having an extra day to analyze. So let's start out in the cash, in the SPX, and I want to kind of just show you where we came from and where we might be going. So you can see this was the 2007 high, this was the crash low that came in early 2009, and you can see from the kind of big 21% or so pullback in 2011, we've been in a channel steadily rising higher. This is a weekly chart, so you can see the channel has been very well defined. We have kind of poked our head above the channel a few times and subsequently came back down. You can see this last correction stopped just below the channel low, and now we've just been riding the channel high, and in a bit of an upper distribution, which I've been talking about. I'm going to go into some more of the levels as we get closer, but you can see the last couple of weeks have been a little weak. We had a bottoming tail hammer last week. This week we had another hammer with a slightly lower low, but still was able to kind of close over this breakout area high from this last correction. So let's get a little bit closer into the daily charts now that you've seen the weekly view, the bigger picture. So where are we now? We are basically hovering around this like sort of breakout area high, and we have been able to close above it on Friday. This was an options expiration, keep that in mind. And the theme I've been discussing the last couple of weeks has been a lot of stocks and markets in general have been correcting, but sort of bouncing ahead of schedule. And just keep that in mind when I go through these charts. I like to see anchor lows, so to speak, like good lows where there's been some capitulation. And a lot of the stocks in the markets have been sort of bouncing ahead of those because people have been so trained to buy the dip the last few years that they jump in before stocks have really kind of gotten to the levels that they should. So let's discuss. So I see this area here is very critical for the market. You can see we made a bit of a lower high here, and we retested that and then have subsequently made slightly lower lows. Now, my thinking on the in the cash market is that we have a couple of options. On next week early, we can rally back up and retest the 50-day and the 20-day. That would also coincide with the roughly around the downtrend line. At that point, we'd have a decision. It would be a good right or right out short to test, but to go with if we break. Because if we break, it would be right or right out short, in anticipation of a come down. If it breaks out, you cover that short and reverse and go long. The target would obviously be these previous all-time high. This lower swing high, and then we have a decision. I think if we could get back up here, we probably would rally back up and retest the old high, and possibly even further to retest the channel high, depending on how long this takes. Maybe play the game again with a slightly higher high and then pull back. You can see we seem to be playing this game every time. It's sort of a game of chicken in the market. You get the bit of a higher high, come back, get a little bit of a higher high, and come back. So I think as long as we hold these lows, the market is kind of just in this upper consolidation period. I'm going to go over this a little bit more in SPY as well. I think if we do retake these lows, particularly Friday's lows and these, we will come back and retest these lows, which will roughly coincide with the 200-day moving average, and possibly we could come back and retest this 50% Fibonacci level, maybe even the 61.8 Fibonacci level, because I do think if this low does give, there will be a cascading in prices, sort of like we saw here. We had these lows. Once they were taken, you see with the big reversal bar, big emotion, we took it right back the next day, and then wham, we got that liquidation sell-off. I think there are a lot of stops hiding below these lows, particularly these over here and these, and if those break, We will test the 200, and I do expect some type of a bounce off the 200 because it gets a lot of attention. Although you can see here, it really didn't hold at all. The market just took it right out. So just keep that in mind. If we do take out the 200, obviously the 50 and the 61.8 would be in play, and possibly even the channel low, which would be down here in this 1800s area. If you measure the correction from there, point wise, we could even come down to 1887, which would roughly coincide. If you take a look, let's see, we would probably not do it right away. It would take a few days, but you can see if we ride this channel up, we might come back down into that area and retest the channel low. So that's what I'm thinking as far as the cash market goes. Let me put that into some SPY levels for you, because we often talk about SPY. I'm kind of a bit of a SPY junkie myself. I like to trade the SPY. You can see channel kind of in a downward trend here with lower highs and slightly lower lows. This 197.86 is a key level. The 200 comes in around 196.72, which is also a big volume distribution area. I don't know why the chart isn't showing this properly. Oh, here we go. Let's just scroll over. You can see this is also a big volume distribution area. So I think this area should be some good support. It's a little bit lower is also the 50% fib. So I think that 195's mid 195 should be a good support range. You can see it also coincides with the channel low if we did come down there and then looking for some kind of bounce action. If that gives, we could always plummet down, like I said, to these other trend lines and the 61.8. So 195 half would roughly 195.45 would be the first target. If that breaks, 192.25. Back on the upside, I would think these 204s here with a 50-day moving average, and also the 20-day and the channel top here would be some resistance. If we can get back above there, I think we would test a little bit higher. I've been talking about time frames and ranges, and I want to show you what I'm talking about. Get rid of that for now. I think we really need to be back up above 205.38 to even think about higher, because this chop area has been a bit of a distribution range. It's very narrow, but the way I see the price action in the charts, this is sort of your upper distribution to get to new highs. Anywhere between there and 201.90, this was the old high. So I consider this sort of the middle distribution, this range. You can see Friday's action took us right kind of back up to the backside of it, but we did not punch through. So we're sort of waning into the next distribution a little bit. And I see that low being this 199.06, and that's why this level, I think, is held very importantly. This could have been a potential left shoulder back a while back. This was also, you can see, an old high. So this area was kind of go time for this breakout into the upper distribution, and that's why I think there's a lot of price memory here, and that's what's held the market. The more times we bang on that, and you can see we've been banging on it, the weaker support it becomes. So this is going to be very key early next week to see how this holds. If, again, like I said, if we take this out, obviously we're going to see the 200 and probably these lower Fibonacci levels for some sort of a real washout, because I do think there are a lot of stops held there. Let's go look at IWM. That's been kind of the one that gets a lot of attention. Excuse me. You can see we have a confluence of moving averages down here, some really big ones, the 100-day moving average and the 200, and that has held. We've held back up. I've said this over this big dump bar here, it keeps the IWM healthy, quote unquote. But really, to get highs, I've been a broken record for this since I've been doing these videos for like 5 months. This 117.37 is in laser focus. It's really important. The market for the IWM, to me, to keep the 121s and new all-time highs in range, you need to be above this 117.37. It is a really, really critical level. But I do think that it is okay. The IWM correction has been kind of okay. This has just been a large chop range, and it's at highs. We looked above here. We came back down. There was some responsive selling at the old all-time high. It did make a little bit of a higher high, but came back. That, to me, is very, very normal price action. So none of this is anything of, to quote unquote think any danger just yet. It could possibly completely fail and we could fall out of bed, but as of now, this to me is just consolidation. And it's sort of in the upper bit of a distribution because we are over that 115.91. So that to me is anything below here starts getting more suspect. Anything above here starts getting more bullish. That is how I see IWM. These reference lows here obviously will be important. If we take those out, the pattern starts to shift, and I can start saying that we're in a bit more of a downtrend. So keep this 113.03 level in mind for IWM health. Anything below there to me starts getting a little bit more squirrely, so to speak. The Qs have just been in this bit of a choppy consolidation also. You can see the old high here was this 100.56. Anything above there, and we are above there just slightly, is still okay, quote unquote. Although for me, I really would like to see this start breaking sort of these downtrend lines. I've sort of drew in a bit of a channel here. You can see, I have a couple of potential scenarios here. Let me draw this one though. You can see we are sort of forming a bit of a down channel, and I'll talk about that in a minute with Apple, but you can see this bar here kind of tested up and failed, and then we came down after that. So I would say you really need to clear 103.62 in the Qs to start forming this W pattern. It's already sort of was trying to form, and now we're, I don't know, in like some kind of like camel humpy looking situation. If you guys take a look, if you want to look up, there's a, I don't want to do this in this video, but if you take a look at three peaks and a dome, which was what led to the 1929 crash, this is starting to look a little bit like we could be setting up for that. It's a little bit esoteric for the points of this video, so I'm not going to do that, but I will let you know. You could look that up and take a look and see what you think about that. So this level to me is key, again, over the 100.56. We did close slightly above there, slightly over the 100 MA. I do see the resistance up here in the channel, and we really need to clear 103.62. Let's set an alert, actually. 103.62, at or above, and we'll do it with actual sales. So to me, over here, it's go time back to the upside. Below there, still a little bit more iffy and suspect. GLD has been doing something that it hasn't in a long time. It has been making higher lows and now higher highs, and it took out a secondary downtrend. This is a little bit of a tough chase for me just because it's moved so far so fast. I do think that this upper... The primary downtrend is in play, though, that it's also a gap to fill. So I would think GLD starts becoming a little bit of a buy the dips now. I would absolutely, this has to be a defined risk trade. And by defined risk, I mean in options. If you're going to trade it in GLD shares, you need to use stops, and you need to be very diligent about that because this thing can move, and it can move and hurt you if you're wrong. This to me was a breakout here over, let's just call it 119. It's 118.99. So if we do come back down and retest this gap in here, I would say it's also a bit of a volume distribution. I think we could do that with a call spread. My plan would be to buy calls down there and sell some calls up here to finance. Maybe you can see this is really where the volume starts coming in, so maybe 125s or 127s as, a call spread. So you'd be like long the 119, short the 125, or short the 127s. And, you just be prepared to lose that premium if you're wrong. I would do February's at the very nearest. I don't like the weeklies. I prefer when I'm long premium to be long dated premium. When I'm short premium, I prefer to be short near dated premium. So that's how I see GLD. Apple has been a choppy mess, and I apologize. I have way too many alerts on here, which are really not necessary because I watch this stock like a hawk. So let's discuss what Apple is doing and what I see it possibly doing in the future here. So Apple has just been consolidating. It had been in a very long defined channel Going back to the earnings back here, you can see the earnings gap, and it tested above here. It came up into the 119.75, and I had discussed that the stock kind of had already had the measured move and the time span that it had and was sort of on borrowed time based on the 2000 and the run to 700 pre-split. And now it's sort of backing off and acting a little bit weak. This to me is just looking like consolidation. I don't think the stock is in any real super danger just yet. Remember what I had said in the beginning of the video, that a lot of stocks are not testing back properly where they need to be healthy. People are jumping in too quickly to buy the dip. Like you can see this, for example. I know the chart is a little bit crowded. I'm going to try and clear some of this up a little bit, but it is really kind of necessary. So take a look. This low here came at 104.63. The 61.8 was 104.57. So it jumped even ahead of the 61.8, and there was sort of like another secondary trend line. We rallied back up, lower high, and now coming right back down. So what would I like to have seen here? I would have liked to have seen this extend a little bit lower and retest the breakout of 103.74, and I think that would have been a little bit more of a stronger anchor point for the stock to rally from. But it rallied a little early, and that's why this isn't as strong of a launching point. I'm thinking Apple could potentially come back down there in the next few days. It would actually be good if the stock did come down, and maybe in like some kind of a panicky fashion, to like retest the breakout, which was the 100.72, which is the pre-split adjusted old high. If we could come back down to somewhere between 103.74 and 100.72, it may even flip a little bit lower because the gap fill from the last earnings would be 99.76. So somewhere between 99.76 and like 103.74, I think that area is a bit of a, there should be some type of price memory, and the stock should be a buy. Particularly if it comes down, if it keeps coming down right ahead of the earnings, then I think it sets up as a long. If Apple decides to rally back up here and get back into the channel, the 111.27, which was the flash crash day kind of low, comes into play, and that should be some resistance. If it breaks the channel, I think then it is a go with to the upper point of the channel, which could take you to like the 115. Actually, it'll be more than that. It'll probably be back up somewhere closer to the old all-time highs, because this is going to take a few days. And Apple would, if it gaps on the earnings, probably will chop for a little bit. So that is my thinking on Apple. If it continues down, it would be a long for earnings. If it comes back up, you sort of have to wait and see. The earnings gap could take you back up and maybe even set up, believe it or not, for a short post-earnings. We really have to see those numbers. So I will discuss this in detail as we get a little bit closer to the earnings day. It's a few days away, and I'll discuss how I'm looking to play it at the time. So that is Apple. Align was one I talked on the stream. I looked like a real hero because I had said to get out about here after multiple days up. It came back down, and now we are at the neckline. This is a key area for right or right out. I discussed this on Friday. On Friday as a spot to be a buyer for right or right out. If it's wrong, we could come back down even into the 53s area, where I do think there would be some price memory, because that was sort of the last real breakout. So that's what I'm looking to do. As a line comes down, the problem with this stock is it doesn't have very liquid puts, but I would be a put seller on weakness into this, somewhere down into where this price memory is. So that is a line. They make the Invisalign braces, by the way. Ambarella, this is in a channel. I had said that we were getting up here to be a little bit cautious, and anything below 58 gets a little suspect for the channel low. So that's how I would play this stock, right or right out on channel lows, right or right out on channel highs for shorts. So longs, and then shorts. So that's Ambarella, very simple. BABA has been also one of these stocks that, again, with the current theme of bouncing ahead of time. You can see here, it should have really retested the IPO day high, but they bounced it a little bit off the 50, came back up, lower high. Came back down here, actually did test just again a little bit high, 99.90. It didn't really get it. Again, a weaker bounce, and now we came back down. We are at the 61.8. This area to me is kind of key, although I would be a buyer, I think, on BABA somewhere in this 92.70, which was the IPO day price right when it came out of the gate. That to me would be a good write or write out, or an area actually to sell some puts. I'd probably be looking to sell the 82s down here, because I do think there would be obviously price memory. It would kind of have reset the whole run. I don't think this stock is over, but I do think it rallied a really long way. This sort of was like the momentum chase, and now it's sort of just, it's taking that back, coming back down to earth. So that area, I think, is an area to buy. It'll probably do something like bounce ahead of time, like it always does, and make a lower high and then come lower, and that makes these points weaker points to buy if the price didn't trade through it the last time. So this area to me is where I'm looking, somewhere between this 89 and 92.70. I think that area was the IPO day low and the IPO day open. Somewhere in there it should set up for a long, and I would either do it through stock or sell out of the near dated out of the money puts. Chipotle, easy one. Just anything above 697.93 is a long. Anything below there gets suspect, and you can have a little bit of give or play, so to speak, to this gap fill, which was 94.26. You can see we got close. Again, another case of bouncing ahead of where it should be retesting for support. I do feel like this is a bit of a chase here at this point. If I were already long, I would frankly still be long. I would have taken some profits, like I had discussed. I said to take some at 700 this day, and then to take a little bit more up here at around 720. It did run a little bit further than should have, but when momentum is going, it is often going, so to speak. But just chop, hard to chase long. That defined risk here, again, if you're playing long, you have earnings coming up, and there is risk that it could come down back into the channel. That is my thinking on Chipotle. So just careful. If you're long and you've done well with it, please do book some profits and put on some protection into the earnings. That is my thinking. Facebook, wow, this has gotten to be a little bit uglier than it should have. You can see this stock has just, it filled the gap. It got up to 82s. I booked some profits. I wish I would have taken the entire thing off. I did get stopped out of a little bit below here. Thank God I used some discipline there. This thing came down really, really strong. It took out this support range, this 76.88 to 78.27 that I have been discussing. We did bounce here. I was looking for this to be some type of a reversal, but once we took that bar out, we have now made lower lows. You got to be real cautious with this. We are, as I see on this stock, a lot of people think it broke trend. It did not. It is in a channel from a while back. I'm going to show you. 2 years should be sufficient. Yeah, you can see we're in this channel back from back here. Touch this low, and we are testing it here. So to me, this is right or right out in Facebook for a long, which I see a lot of people on Friday must have done. It took back a little bit of this. I frankly would feel that Facebook would be, see, the volume on this dump to me wasn't enough. If it was a big spike, I would say that this is probably a good low. It doesn't really feel like that, though. It feels a little bit weak. I would say you have to be a little bit cautious with Facebook as long as it's below this 76.57, which was the high of day here. If you can get back really up above that 76.57 and 76.88, then I think it's kind of it's kind of okay. Below here, right or right out with the dump bar low as your stop. Anything below that 73.54 puts the 72s into play, which was the old high before the breakout, and then potentially even the earnings low of 70. A lot of people have been talking about this thing retesting 65, which was the 61.8 from a while back. It's very possible. I would be a buyer down here. I am just being cautious up here. So let's just play it with those levels. Let's forget about what we think and what we know. We go purely by levels, and I think it would set up long for earnings if it did continue down weaker and kind of get a washout. People are a little bit worried because the last time the stock came down, 75 was a really key level. We closed basically about there. That was kind of for the options pin. So be careful. Use 75, 70, anything above 75 to me is still kind of like okay, but I would really like to see it above the earnings gap down from the last time. That high to me is really key to get back over for the stock to be healthy. Anything below there, still a little bit more suspect. So we're in major caution mode on Facebook. Twitter, I actually have a ratio spread short on in this trade, which would kind of put my break even down in the 29s. My time horizon on that is a little bit long. I may have to adjust that, but I think the stock is sort of choppy. I really want to see what they do on their earnings. I think that the management in this company is a complete disaster and is musical chairs. I think it's an amazing property. I don't, relative to some of the valuations being given to some of the properties like Instagram that Facebook picked up, the valuation, obviously it's kind of crazy, compared to, let's say, like a Exxon or something, but in this kind of space, it isn't completely out of control, and eventually if this thing gets beaten up enough, it'll probably get bought. I think it's still in a range, though, until earnings. 35 is the low, 42, 43 is the high. Anything in that range is chop. Anything below is a go with for a short. Anything above is a go with for long. And I'm just going to stick to that script because it's been what's been working. Gilead, this is a stock a lot of people like. I'm amazed at how many people talk to me about it, but I guess it's a great company with great performance, and it's based on a PE, it isn't too crazy. But we did test this upper line, which has gone back for a very long time, and I had said to a bunch of people on the stream that, careful, get out here. I know a lot did and listened, and I'm very proud of them because it was probably hard to sell up here just because of the way that this thing's been going up. People get excited, but it was a sell, and I was correct, and it came down. The stock, to me, is making lower highs and lower lows, and 100 between 98.37, which was this chop range low, and 100 is a key level. We kind of closed based on options pinning right there on Friday. So if you're long the stock, these have to be your stops, I think. If anything below there to me is more suspect, anything above you can still kind of be long for a play up to maybe to the downtrend line, which is 103. There's 103 and 105, 103.97 and 105.75 has been the upper resistance. Anything in there, I think you just play the game, you take profits. And then if you could get back down below here, I think it starts getting to be a buy around the primary trend. This, again, is a great example of a stock that bounced ahead of time. This really could have came back down and tested the breakout of 84 and maybe even went a little bit further down to like this 80 area. Somewhere in here would have been, I think, a really strong buy to hold the stock for a while. Again, it jumped ahead of time, and that's why it's been having trouble. It's just been choppy, and that to me is really the problem. If you're long and a diehard, I know a lot of you are, just be careful. This 98 area was sort of the gap down from earnings, the high. So you really need to be above that to be long. If it's below there, it's, to me, still choppy and even potentially a short for a retest here of these lows. So this 198, again, I just want to reiterate, really be careful if you're long with this stock. The market's been really slippery, and it just is what it is. Google is at a really big decision point. Wow, did I actually just say decision point? All right. We're at the gap, right really where the gap is. This week it had a lot of relative strength to the market. I really would love to see Google gap down on their earnings, fill this gap here, and retest the primary trend somewhere around 420 and between 420 and 450. This to me would be an absolute buy or at least an absolute opportunity to sell out of the money puts and maybe even just buy the stock. You can see you have these reference lows here. You have the gap fill. That would be amazing. It would be too easy, right? Stocks never make it easy. I think that would be the play. So what I would do is put on some type of a ratio spread for earnings for that. I potentially might even play Google long as well with some type of a call spread, just because it has come down so much and this is a memory area. So I might play it both ways, so to speak, long and short. I will discuss a little bit more as we get to the actual date of earnings. I'd like to see where it is right before. But I would love to see the stock really weak into earnings and come down and set up for a long. But if it could break back up, that might also set up an opportunity for even a better opportunity for the stock. So we're running a little low on time, but I'm going to hit price line quickly. This to me is really important area. This 994.98 to 996. These were the highs from the earnings gap that took the stock to over 1,000. It's also a channel low here. So to me, this is a right or right out area. For long, you could use the lows from Friday as your stop, which was 990. It could, on the earnings, have a move back up. I would say that this is a really big consolidation pattern in price line. Excuse me. It's looked really ugly for a while. If this does get lost, though, I do want to warn you that the next real reference supports are much, much lower. It's 847.33 and even down to the 774.96. So if Priceline dumps, like on earnings, if there's some type of a move where it dumps down into anywhere in this area, the stock has been able to move 100 points in the past. If it has some kind of big gap down, to potentially to this new channel low, which may at the time when we get there coincide with these levels, I would be selling out of the money puts like a demon, because it'll have already been down a lot and then had even more of a flush, and that to me would be an absolute amazing opportunity. In the meantime, I do think it's okay to be right or right out versus the low Friday. That's it. That's my discussion on that. Last one I'm going to leave you with is Tesla. We are getting close to these reference lows. So if you do get there, again, this is another example of a stock. You could see we came back down here to the 61.8. We bounced. I would have really liked to have seen this test these lower 600 levels. I think if it had done that here, we would be back much higher in the stock. But it is what it is. It's in a down channel. You had the head and shoulders peak. This was the completion. We got down there finally and have just been sinking lower and lower. I think that this has been a casualty of lower oil prices and lower gas prices. People thinking that the cars are less competitive in the market because gas has crashed. I mean, the price of gas has absolutely come down huge, and I believe that the thinking is that the mass market versions of this may not do as well as they were expected to do. With that said, we are near the lower end of the channel. If we do get to the lower end, I think you can play it for a bounce play. You can see we have a bit of a downtrend within the channel. So any break of that downtrend, I think, can be played to the channel high. And this 221-ish area, like 220.84, to me is now the real resistance. You can see we kind of looked above there here and failed. So I would think that the stock has potential to pop there maybe on earnings if it keeps coming down ahead of time. So we'll just play it as the channel, long on the lows, short at the highs, and that's it. So thanks, guys, for tuning in. I appreciate your time. If you're not already, please follow me on Twitter. My handle is @JustinPulitzer, and if you like this video, please like it. I love the support that way, and please leave me comments and questions. I'm happy to answer, but probably better to do on the Twitter stream. I respond to those very quickly. Have a great weekend, and cheers.